Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. I hope you had a wonderful weekend, just like I have, and you're all raring to go to see exactly what's going to happen with Bitcoin and the wider market over the next 7 days. And in today's video, I'm going to have a look at the bigger picture view and give you my view as to where I think the market is going in the next few months, all the way up to the end of the year. I'd love to share my thoughts and perspective on where I think the overall market is going, but I'm also going to be doing the micro analysis as per usual and seeing exactly what the developments are in this region here. But before I begin, first of all, I want to say a very big thank you to all of you for watching my videos. That's very much appreciated. So thank you very much indeed for that. And also the polite reminder, as per usual, please remember everything in my videos is for educational purposes and nothing should be taken as financial advice. So please do your wider research before you make any investment decisions. So with that out of the way, I'm going to now share just my thoughts with you in terms of exactly where I think the whole market is going. It is very important for us to zoom out and reflect on the overall bigger picture because it can save us a lot of bad decisions. So the current picture is this, that we've topped out at 69,000, and since the topping out here, we've been in this descending channel, which has taken us to the bottom of this support line here, to the top of this resistance point, and we're dilly-dallying around here at the moment. And the current price is at around about the $39,000 mark. Just by the trajectory of this development here in this descending channel, it looks like we may have one more leg down. Will it be to this level here to match up with these two wicks to the left of side at around about the $35,000 mark, or will it be to a lower level down here? I think you'll find in the next 7 to 10 days a resolution of that. If we have a quick flush very, very quickly, it may well be down to the 30,000 mark because of the support lines that we've got here. So if you take that across, a quick capitulation, you'll see a big bounce very, very quickly. But if we see a slow bleed, that will probably take us to around about this level here at the 35,000 before we can see a strong bounce back towards the $46,000 mark here. And the reason why I say that is because we've been in such a strong dominant trend for such a while. Just the way the historical prices have been for Bitcoin, I would expect a strong rally at any time very shortly. And that could happen before the end of the month. However, on the bigger picture, since the end of the last bull market in December 2017, we've had this 4-year cycle from that point all the way to the November topping here. And we've had a price increase like that. And I know the theory about the extended cycle and what have you, but as time's going on, I'm becoming more and more convinced that we're in a 12-month bear market over here. And for that reason, my general sentiment at the moment is quite bearish. However, if I see signs that we're getting bullish by getting firstly above the 46 and then the 52, then I'm always prepared to change my mind. And as I've said many times, we must never get stubborn in one directional bias, because that will be at your cost. You must always remain neutral and let the price action determine your bias on a trend. So currently, this is what I'm seeing, that we have topped out here in November at 69,000. And just like everybody was expecting the price to go to much higher levels, the market's exactly caught everybody on the hop here. So currently, what I'm thinking is that the best we can hope for is that over the next 6 months to 9 months, we maintain a price action which is 30,000. And while we're going to a slow bleed or a quick capitulation down here, whatever happens, as long as we can hold the 30,000 over the next 6 to 8 months, 9 months, etc., then we can build a base around here, at least, or we can continue with this base here and in this range to create a very solid base before we break out to the upside towards the end of the year. So if you have a look at the previous bull market, when that ended in December 2017, we had a slow bleed for about 10, 11 months up to this point in November. So the market finished in December 2017, but by November 2018, we'd been going basically in this lower low, lower high area and formed a little base there. And when we broke out, we had a capitulation to the bottom before we created a base to go back to the upside. And in the first cycle, it was very, very similar. When we topped out here in November 2013, we created these lower highs, lower lows, exactly what we're doing now. So we created this base here, and then we had a final capitulation towards the end of that year in 2014. And the reason why it may be different this time around is simply because in this first cycle here, we got this big, massive blow off top just a couple of months before we topped out. And in this second cycle, which topped out in December 2017, again, we got a few months before we topped out, we actually had a big blow off top again. But in this cycle, as we know, that we did have a very good run up, but it was nothing resembling what you would expect for a blow off top. So we had two tops here, one at 64,000 and one at 69,000 here back in November. So whilst the narrative can still be made that we have a sideways move until the end of the year and then have a capitulation before we create the base to go back up again, but the lack of the blow off top should reflect in the lack of a capitulation over here. And so that's why I'm thinking that the best case scenario would be a sideways movement within these levels above 30. But should we break the 30, then we're looking at more at the 20,000. And that could take us towards the end of the year before we have another bull run cycle starting again. So only time will tell, but that's just my overall view on the market. So currently, the way things are moving at the moment is that we've had this 3-month dominant downtrend with a few rallies in between, as we've seen. But none of these rallies have really been notable, and I've got the feeling from just by looking at this chart and by looking at the previous historical patterns that we may be in for a major rally, maybe up to the $46,000 or the $52,000 mark here, because we've made this sideways strong consolidation pattern. And just like previously in May, June, July, that was the base to have a big rally up here. We may well get a major rally to the upside here, but I fear that we're not going to reach these levels here, and there's so many hurdles to get above. So the first hurdle would obviously be 46, and then the 52, and then you're talking about 59, 58, 59 level here. So my expectation would be that either at 46 or 52 or even at 58, the market could suck up a lot of money and then roll over for the last capitulation towards the end of the year before we start making another move to the upside in the next cycle. So personally, I'm gearing up for a move to the upside, but I think before we move to the upside, there seems to be one more leg down before we have a major rally. And that could be either towards the lower 30s or mid 30s down here, or we could have a little flush out down towards the 30,000 mark. And that would be for the next 7 to 10 days. Before the end of the month, we start moving to the upside. So over the weekend, I actually tweeted these two charts over here. And that was on the 1 hour and the 4 hour chart. And I showed the Bollinger Band squeeze. This was the 4 hour chart over here. We can see with the Bollinger Bands coming and squeezing the price in between. And on the 1 hour chart, this had been going on for quite a while, and it was getting closer and closer together here. And what that really means is that when the Bollinger Bands start to squeeze together, there is usually followed by that a volatile move, either to the upside or the downside. And because if you look at all my previous tweets before that, my idea was that we were going to go down rather than up on an 80 to 20% basis. And in my previous videos and in my tweets, I'd shown you that this candle here, the spinning top, is going to play a major role in the development of the price action here. And that this had an 80% chance to break to the downside and 20% to the upside above the wicks here and below this wick here. And we've seen the development since then. We've had many attempts at the bottom end and only 1 or 2 attempts at the top end. So the propensity was going to be that there's a bigger chance to move to the downside. And with the Bollinger Bands, which I showed you coming closer here, so in the last few 4 hour candles, you can see quite clearly, I tweeted it when we were at this candle here, that in the next 12 to 24 hours, I'm expecting a big volatile move. And we got it with this candle here to the downside. However, since then, we've ended up creating a bullish harami candle on the 4 hour chart, which has led to this increase up here, this Marubozu candle here. And this has taken the price up to around about the $39,000 mark, which is exactly where we are. But as you can see, with the development of this indecision candle, and this has still got around about 1.5 hours to go as I'm speaking now, it may well be that the upward trend has come to an end here and we're going to be coming back down and closing below this level at 38, 550, 560 level. So this candle is still having an effect on all the price. It should have been negated by this big red candle here, and then we should have really gone to the downside. But this tells us that there is a lot of bullish pressure to buy up at these levels here at around about the $37,000 mark. And if we continued like this for the next 7 to 10 days, then I would expect a retest back up towards the $46,000 mark. So in conclusion, my overall feeling towards this market is that we're in a bearish phase. And the chances are, the very likely probability is that we're going to remain in this sideways move or a capitulation somewhere along the line within the next 6 to 8 months. However, in the short term, what we want really is that the first step is to actually recapture this $46,000 mark here. And then we need to capture the $52,000 mark here. And if that is a possibility, and if we do that, then we can look for these levels here at 58, 59,000. And please remember, we won't be back in the bull run until we really capture this level here at the $69,000 mark here. And the danger with going to these levels, and the reason why I mark them up for you, is that at any of these points here, we can expect a rejection. So if we get above the 46, we probably can get a rejection here strongly at the 52. If we get above that, we can expect a rejection at the 57, 58, 59 level. And even if we get above that, to the 68, 69, we can get a rejection at that point. So it's not until we get above the 69 that we can expect a continuation. Because at any of these points along here, we would be creating a lower high here at any of these points. And the danger is that people are going to get sucked into the market at these levels, expecting to go back on a big bull run and may get their fingers burnt. And that's why I would urge everybody to put these levels on and expect a rejection at these points and to tread with caution at these levels here. But having said that, while we're below the 40,000, we're in a bearish phase. Well, I hope some of that's cleared up some of the confusion and the indecision that people have in their minds about what's happening with the market. And I hope you found some value in this analysis. And if you did, then please do remember to like and subscribe if you haven't already done so. If you've got any comments, questions, or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.